what Marico is doing in today's trading session, where the stock is at this point in time, given the fact it is reacting to its earnings. We have Mr. Saugata Gupta, who is the MD and CEO at Marico, joining us this morning on the show. A very good morning to you, sir. Thank you so much for joining us on ET. Now, let's talk about your quarter gone by. If you look at the quarter gone by, it's been a decent quarter for your company. You have logged in above 5% volume growth, which is much better than some of your peers. But while you have also faced some sort of pressures in the input cost inflation, if you could help us understand what exactly aided the company in the quarter gone by, and also if you could help us with what sort of volume outlook you have for domestic business going ahead.
Two things. One is, if you look at our core, I think Parachute continued to perform decently. We delivered a 4% growth. Our diversification journey is very much on track, and therefore our food business and our digital brands, something which we did invest ahead of the curve sometime in 2020 when we started this diversification journey, that's holding up. And one of the reasons it's also holding up is that it caters to a section of the target group where consumption is not stressed. Also, what has helped is we seeing some recovery in rural. So we hope going forward in the second half of the year, we hope to slightly improve this and deliver a sequential improvement in volume growth we have done in the last 3 quarters, 3, 4 and 5. We want to improve on that. And most importantly, while there has been input cost increases, which will lead to some pressures on margins, but we expect and we are extremely confident of delivering double-digit revenue growth in the second half of the year.
Gupta, we've also seen some pressure on your margins actually this time around. If you look at the margins, they have actually declined on a year-on-year basis with the raw material prices for copra and for rice bran oil rising significantly. How do you actually plan to manage the pricing, and this also while maintaining the competitive margin levels? How do you see these costs actually kind of impacting you, and also will you be passing them on to the consumer? So what I mean to ask is there some price hike on the card?
We have taken 2 price increases. Having said that, I think it's very important given the fact that the consumption situation is, while improving, is not exactly the best. We have to take calibrated price increases. I think we will continue to focus on driving revenue growth and sequential volume uptick, and there could be a worst case scenario of a 50 bips on annualized basis drop in margin, which is fine because last year margins had peaked. What is most important is to get back consumption and continue on the diversification journey.
Alright, so you've undertaken adjustments in your general trade channel. If you could explain to us how will this impact the business going ahead? Is the impact of this adjustment one-off in nature, or can we expect this to actually recur in the few more quarters going ahead?
I don't think we have taken any adjustment this quarter. We have been doing what we have been doing is a gradual effort to improve the ROI of the general trade in terms of reducing stocks. At the same time, we are attempting to, with the project Setu, which will drive much more direct distribution. I think what will help our general trade partners is that we have been facing deflation for the last few quarters. With the price increases, the revenue growth coming in, it will also help. Having said that, I think it's very, very important that we continue to support our distribution partners so that they get ROI. I think in India, general trade will continue to be very important. The distribution system will continue to be important, especially in the smaller towns and rural. I think it will be a long-term source of competitive advantage, and therefore we are committed to ensuring that they grow.
Right. So let's talk about your value-added hair oil segment. If you see that particular segment, it's actually seen a negative value growth. So has the segment actually bottomed out, and are you expecting a reversal from here on? And if you are, then if you could quantify and tell us by when.
The decline has bottomed out. I believe that there has been a significant commoditization in the category because of some certain competitive actions. However, we believe as market leaders, it is our job to invest behind category growth and drive category penetration instead of just fighting on pricing and trade offers. And therefore, we are. I think we have done a kind of I would say a change in strategy as far as value-added hair oils is concerned, and therefore we are extremely confident that this is the rock bottom as far as the performance in VAHO is concerned. It will gradually improve over the next couple of quarters.
Right. So, what's your outlook when you talk about copra prices in the medium to long term time horizon, and also how will this influence your volume growth targets for coconut oil in the upcoming quarters?
Goes through alternate cycles of inflation and deflation. Usually it is around 18 months. We are on an inflationary cycle. Historically, we have performed better in inflation than deflation. Although there is some, sometimes a compression of margins, but we actually operate in all emerging markets where we firmly believe that you can always get margins back. We have to focus on volume growth and market share. So I think we have, as long as this inflation is moderate, I don't think I would believe that the pricing is broadly peaked. I think we will be able to weather this out pretty well.
Lastly, let's talk about Saffola oils. The pricing growth over there has actually turned positive after 8 quarters. So, if you could tell us what's the outlook here, given the price hikes that we've actually seen in the rice bran oil segment?
I think Saffola, we don't like too much volatility because volatility leads to some impact in performance. The current pricing obviously has led to a 15 to 20% price hikes. We are watching it closely. And having said that, I think entire focus on Saffola master brand is aggressively growing foods and reducing dependence on Saffola oils in the overall mix, because the Saffola food business makes higher gross margin. It has a far more bigger runway for growth in the future. So I would say that I would think right now with this price increase, we should be able to manage a kind of a low single digit growth in Saffola. But what is more important in the Saffola master franchise is growth of foods, which we are aggressively growing.
All right, Mr. Gupta, we leave it there. Thank you so much for joining us on ET Now. All the best for your upcoming quarters, as well as festive greetings to you and the entire team at Marico. That was the management of Marico talking about their earnings, what worked for them, and where they see the way going forward. But on that note, we slip into a break on this edition of Deal